In yesterday's video, I went through specific trades on Solana, Doge, and a whole lot more, XRP, Bitcoin, to give you an understanding of how you could make money no matter what the market was doing. The markets across the past trading sessions have not been that great. They've basically been red. Even in markets like this, you can make money, and we can see the day before yesterday was even worse. You can make money going long at spot even in red markets, but you must know how to buy and sell by structure. My practice is to buy at spot and to sell at spot. If you use leverage, it's really dangerous, even if you know what you're doing. So many fortunes have been lost by people who were very, very intelligent, but they used high leverage and they wiped out their own fortunes. You can see here on Solana, this is from the past 24 hours. I was buying on red and selling on green. Buying on red, selling on green. We can see that Solana in the past 24 hours has come up 0.88%. One thing I talked about in yesterday's video was the role of annualized ROI. It's a great secret inside financial markets. And since I made the video yesterday, you can see this is from yesterday. Many buys, many sells, many buys, many sells. I only use the markups from inside the service, otherwise I don't know the structural levels. It's not only confined to Solana. You can see Doge over the past 24 hours. Many buys, many sells, many buys, many sells, many buys. I only trade the Tier 1, Tier 2 and Tier 3 charts because they're marked up with CTKS structure. Without this structure, we simply don't know where smart money is buying and selling. Therefore, we could sell at support and we could buy at resistance if we don't know this information. That's why I focus on these key charts. I'd also suggest that you look through the CTKS method checklist video. It's very important to be able to understand how to link the Tier 1, Tier 2 and Tier 3 charts together. There were so many fantastic comments and shares in yesterday's video. I'm just so grateful to everyone. Each and every day, Kate and I seek to give you a new insight, just like Arjun was talking about. We're seeking to give you those aha moments, as Red 5 Ruby said, and to make what's possible clearer to you. There were some fantastic questions in yesterday's comments. I'd like to answer this specific one as well. The sheer number of trades across all of the coins makes me wonder about the actual organization of your everyday routine. This is a great question. I look at the Tier 1, Tier 2 and Tier 3 charts. I see which ones are strong, which I want to get closer into price action on, and then I just place my buys at strategic levels. I won't place any trade unless I know the CTKS structure. Then I just wait for those to fill. There is no bot or automation. I do everything myself. Once you've placed a trade, you just wait for it to fill. That's pretty much it, and you can do whatever you want to do whilst that is happening. I absolutely love everybody's questions. Please keep them coming. Art said, I use the CTKS trading method levels and I'm aware of retail thinking. Art's been in the market for a very long time, like myself. Everybody has a different style. Art looks to make between 20 to 30% within a month or two. There's absolutely nothing wrong with this whatsoever. It's a really good thing to do. If you're making any percentage profit, you're already on the right side. But if you can turn trades over more quickly, that's even better. Kate and I are here for you. We want you to be successful. We want you to have a financially independent life and all the fantastic things that life has to offer. If you could please let me know, just as a percent, roughly how much you invest in crypto, that would be really, really good. Arts, for example, says he's been about 99% into crypto. If your majority focus is on crypto, I'll do more on crypto. If it's somewhere else, I'll do more on that. Like Art, what I've found is the crypto market just is so volatile. It's just a perfect market for CTKS trading. In yesterday's video, I was saying that buying on red creates nerve shock. For example, I think a lot of people would have got nerve shock with Doge coming down like this. It was looking pretty good, but then it just decided to tank tank. Witnessing this and layering in on these structural levels is not easy to do. That's why it's critically important to know where the structure is and to gauge the amount of strength inside each chart. When I first started trading, I struggled with the concept that I was told trading is a zero-sum game. You're like in a gladiatorial match across from another person who wants to take your money, and you either take theirs or they take yours. This is utterly false. But for years, I had self-sabotage myself. I just couldn't stand the thought of somebody else losing because I was gaining. Financial markets are like the pot in a poker match. All the poker players are doing different things. Some are going long at spot, some are going long under leverage, some are going short, and others are just swing trading or investing for the long term. Everybody's doing different things. If everybody was doing the same thing, the zero-sum game would apply. But everybody is doing a different thing. Self-sabotage is often done by people who are really good people. They just can't reconcile that you're in a gladiatorial match with other people. It is not true, and it never was. Just think about it like this, but you're just bartering. If the trade is not successful by both parties, it will not occur. If this person wants to give a banana and this person wants to give an orange, they're both benefiting from the transaction. And that's what it's all about. Even negotiation is set up as a confrontational, aggressive thing. Negotiation, if done correctly, benefits both sides. Overcoming nerve shock is incredibly difficult to do until you change your mind on what it actually means. When you're buying on the way down, you're getting on the right side of the percentage. This is very counterintuitive, but the lower you go, the safer you are. These are real trades on Bitcoin. As Bitcoin was tanking, coming down and down and down, everybody was suffering nerve shock, and this is the normal thing to happen. But we buy in at structural levels and we sell at a reasonable target. These particular target rate percent returns were around the 5.5% mark, and they were done in 24 hours. That 5.5% that was turned in 24 hours has a very high annualized return on investment. That means it can grow a specific sum by very large amounts if you can keep on doing that. And you don't have to have a large amount. You can have a small amount and it will become very large over time. And I really want to thank everybody for reaching out and directly messaging me. If you go to the YouTube channel and you just click on the About, you can see down here that you can directly message me on Twitter. Please be aware that there's so many scammers and impersonators out there. I will never ever manage your money for you. You must manage your money yourself. The only things I do are registered in these links on the About page. That's it. I do nothing else. That's why I want to share things like this. When people get nerve shock, you can get rid of it because you know what the structure is inside the chart, and then you just seeking to optimize your annual return on investment. Well done to Roland. My nerve shock is finally calming down. Well done, my friend. The key to successful trading and investing is that smaller percentage gain over a shorter amount of time. And when you look at the video from yesterday, you'll see exactly how that works. It's mind-blowing. You'll find that those small percentage returns every day add up to an incredible amount annually. Thank you, Silverbytes. I'm so incredibly proud and honored by the success of our community. Somebody reached out to me today on Twitter, X, and DM'd me and said they're paying their children's school fees as a direct result of the knowledge they have obtained throughout watching the videos. It's just beautiful. And Sanjeev says, I personally have been doing really well this year. My portfolio is seeing the results of those annualized percentages. You're a legend, Sanjeev. Awesome. Whilst everybody is chasing those high percent absolute ROI returns, we're chasing the smaller ones with huge percentage annualized ROI gains. That is the game changer and a light bulb moment for sure, as Nashvin said. Literally, what Kate and I are here to do is to change your lives positively, but you have to take control of what you do when it comes to buying and selling. And thank you so much to Fabs. What a beautiful comment. Dinesh said it really well. The key is to gauge the tier 1, tier 2 and tier 3 charts. Look at the structural levels. Have a look and at what is gaining strength and what is losing strength. If something is gaining strength, you want to focus on it. If it's losing strength, you want to lower your buy levels. Tales from the Man Cave had a really good question. How do you determine your targeted percent of return? Is it a fixed number, say 2% or anything? This is a really good question, and the answer is it's flexible. For example, a single trade on Solana was in excess of a 67% return. What you want to do, actually, Tails, is to look into the structure of the charts, see where the fresh air gaps are, look at the momentum underpinning the charts, and look for an annualized ROI that just is attainable. We did so well on Solana as a community because we knew that it was leaving structural resistance and heading into fresh air gaps. One thing is, as Tails says, or is it based on the air gaps within structure? Sometimes you don't have air gaps. Sometimes you just have to take reasonable restriction levels. And what I mean by restriction, well, I'll show you. When I purchased Bitcoin all the way down here and I sold it all the way up here, I was expecting a retracement and the retail crowd to start to short Bitcoin at this particular point. So I knew this was around the top of price action, at least for that wave. And I knew the structure was very, very solid. Look at all these solid structural levels. It was very safe to buy Bitcoin in this particular scenario. But a lot of people, if they don't know the structure, they'll just look at the chart like this and say, oh my goodness, this thing is going to fall to zero. It's going to go to 10,000. And if we look at what's happening right now inside Bitcoin structure, we can see that series of higher lows is starting to form. We've got a little bit of weakness throughout here, but that's just going to do mean reversion in all probability. But it looks really quite good. And when it comes to setting a targeted rate, you have to be aware of what retail will look at. Literally exactly what I did when I placed the sell orders up here. You saw all the buy orders and all the sell orders on Bitcoin. This was the logic inside that. What I seek to do is trade across all the tier 1, tier 2 and tier 3 charts in crypto. I specialize in those levels. That is 9 crypto charts that I trade across. Please keep your questions coming. If there's something that I can help you out with, you can either just drop a comment on YouTube or directly message me. Just a quick answer to 598 on could you share on a future video the timing and activities of your trading day or night. I would really like to get a glimpse of what you do on a daily basis and how much time you spend. What I do is that I set my buy and sell levels basically 3 times per day. Once around the morning when I get up, one around lunchtime, and one before I go to sleep. I find that's sufficient. I know a lot of people just sit at the computer looking at price going up and down all day long, but I don't do that. I've got so many other things that I'm doing at the same time. One thing I avoid is going outside the tier 1, tier 2 and tier 3 charts. I didn't always do this, but when it comes to getting those annualized return on investments, you are much safer inside the tier 1 to tier 3 charts than you are anywhere else. This may sound really counterintuitive, but it's true. I want to say thank you again for everybody who commented. It's just so beautiful. The question of the targeted rate of return, that's a very important one. It will be determined by the structure, price relativity versus structure. For example, if price is under a tremendous amount of structure, your targeted rate of return will be small. If price is entering a fresh air gap for the first time, your targeted rate of return can be enormous. Tiki Mint asked the question, what is your thoughts on how long the bull run will last and how price or where price may head to? The crypto market is going to reach widespread mass adoption within the next 12 months. And the beautiful thing, Tiki, is to think about this. When we BORSOG, we don't care if the price is going up or down or just consolidating. We're making huge annualized ROI all the time, each and every day. A big call out to Space Falcon and a call out to Tobias as well. The biggest challenge that you'll ever have is fighting your own doubt. This is really normal, Tobias, and thank you for sharing. You can get around self-doubt by knowing where the structural levels are and then having your three-dimensional risk management to know what you will do if price goes for you, goes against you, or goes nowhere. And well done, Sinman. Log for the win. Well done, my friend. The one thing that you will find when you buy in the market, when you're going through this pain barrier and you're buying, it is quite difficult, and your instincts will kick in and say, what the heck are you doing? You should be buying when it's going up. You'll be safe there. But you're not safe when it's going up. You're safe counterintuitively when it's going down. And you can see that you can turn around your buys and sells very quickly. I hope you found this video useful, and if you want to go and reach out to me, just click the about and you can reach out to me on Twitter. And please be aware that these are the only things that I'm engaged with. If you've liked the content, please smash that like button, and if you're not part of our global family, you should be. Please join and subscribe. I would suggest you just go back into the video history and look for how I trade. It's a fantastic video and it could change your entire outlook on trading. Remember, trading is not a zero-sum game. Everybody is in the market making their own decisions that's best for them at that specific time. The market simply pays you when you're synchronized. If you're not synchronized, you make losses. Those losses are not there to punish you. They're there as a learning experience. The market is really caring. It wants you to learn. And when you embrace it like that, everything changes. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.